This is the FCTO Daily Forex News Report for the 5th of July 2013. The US dollar remains firm as market focus is turning to employment data from the US. Economists expect the Non Farm Payroll report to show a 162,000 job growth in June, while the unemployment rate is expected to drop to 7.5%. The ADP report showed larger than expected growth in private sector jobs by 188,000 in June, and the data supported a solid non-farm payroll in the same month. Also encouraging was that the employment component of ISM services posted strong gains to 54.7 in June, even though the headline composite index dropped to 52.2. However, it should be noted again that the ISM manufacturing employment dropped into the contraction region of 48.7. Another focus of the day is Canadian employment data, which is expected to show a 12,300 contraction in June. The unemployment rate is expected to be unchanged at 7.1%. Canada will also release Ivey PMI, which is expected to drop to 59.6 in June. Other data to be watched include Swiss foreign currency reserves and CPI. European majors tumbled overnight after the European Central Bank and Bank of England meetings and have remained soft so far today. The European Central Bank left the main refinancing rate unchanged at 0.5% and maintained other unconventional monetary easing measures. Policymakers expect key European Central Bank rates to remain at present or lower levels for an extended period of time. The central bank pledged to monitor all incoming information on economic and monetary developments and assess any impact on the outlook for price stability. New Bank of England Governor Mark Carney left the bank rate unchanged at 0.5% at his first meeting. He warned that the rise in yields is not warranted. As mentioned in the policy statement, significant upward movement in yields will put pressure on expectations for growth and inflation. Also, the implied rise in the expected future path of bank rate was not warranted by the recent developments in the domestic economy. On the UK's economic outlook, policymakers noted that there have been further signs that a recovery is in transit, although it remains weak by historical standards, and a degree of slack is expected to persist for some time. Concerning the political crisis in Portugal, Prime Minister Pedro Passos Coelho continued to maintain the coalition government. After a meeting with his former foreign minister, Coelho stated that the two ruling parties have found a formula to maintain government stability. He also affirmed that the president and the government will find the best solution for the crisis. The announcement sent bond yields lower, which had surged to as high as 8% during the midweek. For all the news affecting the Forex market throughout the day, join us at forexcurrencytradingonline.co.uk. That's forexcurrencytradingonline.co.uk.